Good afternoon, everybody. My name is David Marsh. It's a great pleasure to be introducing once again, now for the fifth time, the Absa Financial Market Index for Africa, which OMFIF is very proud to be doing with our friends from Absa. This is like a family occasion, actually. It's such a pity we can't be with you all in person as we were for the first 3 years, but this is the next best thing. We're united by a worldwide audience of hundreds of people, and we do hope that you'll be joining in, also asking questions about this year's latest advance. And as people have said in the past, this is an organic index. It grows every year. We've had the COVID crisis to deal with, but we've also made a lot of methodological changes, not least bringing in a lot of governance and sustainable factors into the way we measure prowess in the African financial markets. We really do think this index is a living, growing organism. And we're very pleased to have so many partners working with us. They're all listed in the report. So without going into the details now, I'm simply going to express my thanks once again for this great work together that we've done with Absa. And I'm going to ask Jason Quinn, who's been on the broadcast before, who's now the interim chief executive of the Absa Group, to say a few words just to take us away. So over to you, Jason. Many thanks for you and your team to be here today.
Thanks very much, David. It's an absolute pleasure. And good afternoon to all of you joining us from all over the world in what's afternoon in Johannesburg at the moment. It's my pleasure to welcome you and thank you for joining us today for the launch of the 2021 Absa Africa Financial Market Index report. I'd like to acknowledge the governors and various government officials at this event, especially Caroline Abel, Governor of the Central Bank of Seychelles, and Moses Pereiro, Governor of the Bank of Botswana. Last week, the World Bank released its African Pulse publication, in which it noted that the economic recovery on the continent remains fragile, and the slow pace of vaccination continues to expose the region to emerging strains of the coronavirus. This is holding back economic performance. It also said that the growth performance reflects subdued investment in the region. The bank also said the public debt levels for the sub-Saharan region at an estimated 71% on average have increased by 30 percentage points, and that this rising fiscal burden is expected to cause significant sustainability concerns. Of course, all of this underpins the importance of both foreign and domestic investment on our continent, on the back of improved transparency and investor confidence to unlock growth and transform the lives of people. Absa is a Pan-African business with a presence across 12 countries. We firmly believe that the financial market development can play a vital role in increasing Africa's resilience to shocks and improve the continent's chances of a sustainable recovery. Our partnership with our friends at OMFIF, which produces the Africa Financial Index, it's now in its 5th year, and it's one that we're also very proud of, as David mentioned. It produces valuable insights for the investment and business community on the continent and globally. As we navigate continued uncertainty, quality data for Africa's dynamic markets is essential for mapping growth opportunities, as well as the constraints that impact local and international investments. The index provides a set of common metrics for our countries to understand their unique financial markets so that they can develop policies and strategies to address challenges and limitations and attract more investment. This index provides a portal to get things done. It demonstrates that Africa is open for business and full of exciting investment opportunities. At Absa, we're committed to helping create an enabling environment for investment and sustainable economic growth. In this year's index, we're particularly pleased with the introduction of the sustainability focus indicators, which entrench our long-term views for growth. Even though these indicators tend to weigh scores down this year, especially for countries at an earlier stage of development, we are confident that this is an effective way to inspire countries to work towards sustainable goals and development. I'd also, right now, I'd just like to make a special mention of a dear departed colleague from Absa, our Deputy Group CEO, Peter McClary, who passed tragically from COVID earlier in the year. And just record our sadness as Absa that Peter isn't with us today after having been involved in the launch of this forum and these presentations over many years. We still miss Peter dearly at Absa. And David, I thought it was just right for us to record his contribution at this point. On behalf of all of us at Absa, we truly appreciate your time and support today. We thank you. And I'll now hand you back to David, who will lead the rest of the proceedings.
Thank you very much, Jason. And I'm very pleased you did mention Peter. He was a real friend and a man of great wisdom and quiet dignity, and his spirit shines on with all of us, I would say. But to take us into the meat of the report, and as you said, Jason, this is a portal for getting things done. It's a practical, live report that is not just theory, it's practice. I'm going to hand you over now to two people who had a great deal of work to do, for which we thank them very much. These are two people who've been associated with the report now for many years too. Jeff Gable, who's the head of macro and fixed income research at Absa, and Kat Usita, who's the head of reports and surveys of OMFIF. So they're going to take you through this in a presentation of slightly less than half an hour, and then we'll be getting back into the panel discussion. So please do stay with us. If you've got any questions, do send in questions by the chat function, and we'll be doing our best to answer. So over to you, Jeff and Kat, to take us through the survey.
Thank you, David. Many of you have been with us from the beginning, but worth a quick reminder of what we're doing here with the African Financial Markets Index. Our starting point has always been that effective financial market development can best ensure that Africa is well placed to attract global capital. And just as importantly, that Africa encourages the effective use of its domestic financial assets as well. To do that, we believe that African regulators and policymakers, the exchanges and the providers of capital and the users of capital are best served by a financial market ecosystem that is characterized by openness, by transparency, and by accessibility. And our strong conviction is that as Africa seeks to recover from the ravages of the pandemic, the importance of effective financial market development and helping to ensure access to the capital necessary to ensure a better life for all Africans will be even more critical. So as you've heard from Jason, as partners in the exercise, Absa and OMFIF look to provide an information repository where countries can easily be compared, with which discussions and debate and learning can be encouraged, and that as a collective, Africa can really push forward. So if we push forward a page, and before we get to the scoring itself, I just want to highlight a few of the qualitative aspects that I think really make the report very valuable. First, despite all the challenges, thanks to the global pandemic, it's very clear that financial market development remains a real focus across all of the index countries. To pull a few examples from the last year, we think about the themes of, say, early market development. Lesotho has been prepping to have the first company list on its equity market. Ethiopia is one step closer to launching a securities exchange with a parliamentary proclamation in the bag now. We think about facilitating retail investment. The Malawi Stock Exchange has a WhatsApp portal that helps sort of provide information on how a person would invest, and then provides basic financial information for listed entities as well. Uganda has done work sort of linking the securities exchange and the central bank in order to make it easier for retail investors to engage in that market. And then we've also had great examples of long-term financing in so many parts of the region. But let's just highlight two: Kenya raising nearly $750 million in a 21-year infrastructure bond. Tanzania taking the local bond curve out 25 years most recently. So really exciting developments on that side. Second, and if we move forward a page here, just as is the case globally, there's an awful lot of financial market innovation happening across the continent as well. In last year's report, we had a real focus in a box about exciting developments in ESG. This year, I'm really pleased to say that those both products and policies around sustainability are a formal part of the scoring. You're going to hear a chunk more about that a little bit later. But digital tech and financial innovation is also very much a focus. So if you take a look in the report, pages 21 and 22, you'll read about automation and digitization of trading platforms and regulatory processes across the continent. You read about those countries that are pushing forward with regulatory sandboxes So sort of fintech and innovators and regulators can get together to really understand where the opportunities and challenges are. Digital currencies and assets, very much a theme here across the continent, just as it is globally. But let's move to the index more formally right now and provide just a little snippet of background first. How do we generate the scoring? Well, as you might expect, and certainly we learned when we sat down in 2017 to set this up, there's no clear and obvious way to measure such an expansive set of ideas as sort of openness and transparency and accessibility for Africa. So we've organized around 6 broad themes, or what we call pillars. Across those 6 pillars, we've captured more than 40 concepts in the index. Some of it's annual data, so the data edge would be the end of 2020. Some of it is available at higher frequency. The data edge is around the middle of the year. You can find a complete list of all of the things that we've included in this on page 42 and 43 of the report. But let me also just preview that by saying that an awful lot of the data that we use here is available publicly, but UMPIF also conducts a survey across the countries to really flesh out the data and get that local markets knowledge. More than 50 individuals across the continent contributed to the data that you see in front of you today. And you'll also see in many cases their comments and additional color in the report, which really provides sort of another layer of insight into African financial markets develops. But I'm mindful that I'm already probably 4 or 5 minutes into my talk, and we haven't even talked about the scoring itself. So let's turn to that. The headline focus is always going to be on the ratings. Let's get that out of the way. You can find these ratings in more full detail on pages 7 through 9 of the report, where we organize it in different ways. But notably, you'll see South Africa takes top marks. The top 3 are the same top 3 countries as last year. So South Africa, Mauritius, Nigeria, all 3, and indeed 19 out of the 23 countries in the index saw their scores slip this year. And as we're going to learn more about in the pillar discussions that follow here, I think there's probably 3 broad reasons behind the slump that we've seen this year. One is just the inclusion of the sustainability related measures for 2021. Didn't see any country score full marks. This is really very much a part of the market that's in development. Saw many countries score very minimal scores in that space. So that certainly pulled the averages down. Then we had some methodology changes. Some indicators we were using from the World Bank, for example, aren't available anymore. They just tended to be indicators that many countries tended to do fairly well on. So their exclusion has caused sort of a bit of a decline. But then, and let's be very transparent about this, there were also sort of outright deteriorations in a number of indicators, either through the policy side or just through market conditions. So for example, the pandemic has seen trading volumes in a number of products really fall considerably. We've seen foreign reserves in a number of markets decline. We've seen economic growth take a hit. We've seen public debt rise. All of those things certainly hurt the scores of many countries in the index. But despite those challenges, there are some standout performances that I want to highlight here as well. So 4 countries, even in this difficult environment, managed to increase their scores, 2 of which, Ghana and Uganda, take this advantage into moving up the table into the top 5 overall for 2021. I'd like to give a special mention also to Malawi, where a focus particularly on financial market developments sees the country jump 8 places this year, from 18th last year to 10th overall this year. Really a stunning contribution in a very difficult environment. Angola too, maybe not too far off the bottom of the table, but moving up into 20th place after making important contributions in that space. But let's go now to the pillars themselves. Let me hand over to my colleague from UMPIF, Kat Lucita, who will take you through the first several. Thank you.
Thanks, Jeff. So I'll move on now to pillar 1. So pillar 1 is market depth. And this is really an exciting pillar because we really see how markets are moving, how it's growing over time. There are 14 indicators that feed into pillar 1. And to make it a little bit more easier to digest, we've classified those 14 indicators in 5 categories. So these are product diversity, the size of market, so market capitalization, liquidity as measured by turnover ratios, market depth, and whether there's a primary dealer system or not, whether there are secondary market makers. These are all the things that we look at in this pillar. And on your screen, you'll see the chart with the scores. And there are dots there that represent the 2020 score. So as Jeff said earlier, we really want the index to be something that is able to track progress over time. So by including the 2020 scores in these graphs, you'll see more of them later, we want to enable readers of the report to appreciate how countries perform compared to last year. So in Pillar 1 particularly, you can see how in some countries there has been some modest improvements from their scores last year, but in most of them there was a deterioration in their Pillar 1 score. So there were two factors that was driving this slight deterioration in scores. So one of those is just slower market activity. So low liquidity pulled down scores. We were looking at data from July of 2020 up to June 2021. And we saw that particularly in the second half of 2020, there was slower equity market turnover, and that translated into lower liquidity scores across the board. So if you look at the pink bar in the middle of the chart, these are the bars that represent liquidity, and you'll see it quite small for many of the countries. The other reason that scores deteriorated in this pillar was the introduction of a new indicator, one that is focused on the availability of sustainable finance products, which I'll talk about in some more detail later. But first, let's talk about equity turnover. So although there was a general slowing of equity markets, so taking an aggregate, the countries that we looked at in the index, their aggregate equity turnover ratio went down by 5 percentage points. Although this was the case, there were some exceptions. So the Egyptian exchange, for example, had a turnover rate that went up by 68%. And their turnover ratio went up by 16 percentage points. So in the chart in front of you, you see the 10 most active exchanges with Egypt on top, and you see the increase from last year. Comparing it to the other more active exchanges, you see that there was slowing down in those other exchanges. So Egypt really is an outlier in this. Having said that, we expect that as markets regain investor confidence, this will change for this particular indicator for next year. The other reason for the slight deterioration in scores was the introduction of a new indicator. And I'm going to spend a little bit of time talking about this just to explain the rationale of why we're introducing new indicators in this year's index. So this particular indicator looks at the availability of sustainable finance products. So we checked whether countries had issued green bonds, blue bonds, other sustainable instruments, including sustainable equities, sustainable exchange traded funds, sustainable mutual funds. And each country that had at least one of these instruments earned points for that particular indicator. So we wanted to look at this because we want the index to reflect current market developments. We know that green finance is growing. We know that sustainability is a big focus for many investors. And we want to reward countries with points for having introduced these products and, in essence, broadening the diversity of products available in their markets. We also wanted to encourage countries to issue these instruments because we want to see how it can facilitate the flow of capital into projects or initiatives that are sustainability focused. And that's something that can benefit the countries that are at the receiving end of these investments. So as you can see in the table in front of you, Kenya and Morocco are among the countries that score quite well in this particular indicator because of the variety of instruments or sustainable finance instruments that are available in their market. And there are 7 other countries that also have at least one of these sustainable finance products. And we thought it was important to make this a formal part of the index, unlike in the past. So we have made sustainability a part of the discussion in the report, but we hadn't really scored countries based on them, because many of them were still at the early stages of thinking about whether they wanted to introduce these products in their market. But as you can see in the table, there are several countries that are already doing this. So we thought it was time to make it a formal part of the index. And although that meant there was a little bit of an effect on the scores, because not a lot of countries, or not all countries, have at least one of these instruments just yet, we think it was important to set it up as a new target or as a new goalpost that countries can progress towards. So let me now move on to Pillar 2. So Pillar 2 is access to foreign exchange. In this pillar, we look at the ease of moving capital, how easy it is for investors to move capital across borders. We look at the liquidity of foreign exchange markets. We measure this through interbank foreign exchange turnover. We also look at foreign exchange capital controls and the availability of official exchange rate data for investors who need this. So similar to the chart earlier, you can see the dots that represent last year's scores. You might notice that there's a bit of a gap with the scores for this year. So the general reason for this decline in scores is this one indicator that we look at, the ratio of net portfolio investment to reserves. So in this indicator, we're trying to measure if countries have enough foreign exchange buffer to cover any potential capital outflows. So we have this indicator because we want to ensure or encourage countries to build up their reserve position so they're not left vulnerable should there be any sudden shocks, as we've seen in the pandemic. That this is something that's particularly important. Across the board, we saw a decrease in many countries' level of foreign exchange reserves, and that caused a deterioration in that particular indicator. This was true for some countries more so than others. So for example, in Malawi, their level of foreign exchange reserves went down by 30%. But there were also some positive outliers. So for example, in the case of Eswatini, their reserves actually went up by 24%, and that helped them progress quite significantly in this pillar. There were also some other positive developments with the other indicators. So for example, with Ghana, their score in this pillar improved because of more frequent official exchange rate reporting. So that's something that we score. Ghana has also reported a wider adoption of the FX Global Code. So this is a code of that promotes best practice in foreign exchange markets. So there are quite some positive developments despite the deterioration in this pillar scores. Moving along to Pillar 3. So Pillar 3 is market transparency, tax, and regulatory environment. So we check if countries' banking systems have adopted the Basel Accords. We check their reporting standards. Have they adopted the international financial reporting standards? We also look at the tax environment, the withholding tax rates for dividends and interest earned for non-residents. So these are indicators that don't tend to change a lot year on year, although when there is progress, we report about it in the report. What's really driving the scores in this particular indicator or in this particular pillar is in the introduction of 3 new sustainability-focused indicators. So similar to Pillar 1, where we introduced the indicator on availability of sustainable finance products, in this market environment pillar, we also introduced 3 indicators that look at sustainability-focused enabling policies. So here on this table, we have some details about those indicators and the countries that have adopted them. So we have here whether or not they have incentives for issuing sustainable finance products. We look into whether they've integrated ESG into financial market standards. And we also look into whether they've incorporated climate stress testing as part of their financial stability mechanisms. So you can see with the first column that there are many countries that have some incentives or policies that encourage the issuance of green instruments. So we have Zambia, Nigeria, Mauritius, Kenya, Ghana, Egypt. These are examples of countries that have some form of green bond guidance or sustainable bond guidance. You can read more about the details of this in the report, but I'll mention Zambia for having reduced registration fees for green instruments. So that's a type of incentive that really encourages the availability of these products. And so there is a connection with a Pillar 1 indicator that I talked about earlier. A lot of countries have also integrated ESG factors in their financial market standards. A less popular indicator is the one on climate stress testing. So as you can see from the table, only South Africa has incorporated this in their macroprudential framework and in their risk assessment of the central bank. So it's quite encouraging looking at this table that over half of the countries earn some points on these ESG indicators. So I think that's a very encouraging thing to point out. But having said that, there are still many other countries that can build on the progress that their peers have made and really try to replicate this in their jurisdictions. And by making this formally a part of the index, we hope that that's a direction that countries take, that they look at these factors and think about how this is something that they can integrate in their markets in order to help their markets grow and expand and ultimately attract more investors. So I'm going to stop there and hand over to Jeff, who will take you over through the rest of the pillars.
Pillar 4 measures local investor capacity based on the amount of pension fund assets available in the country relative to the population and to the market cap in the country, and then there's some adjustment for turnover. Throughout the history of the index, Pillar 4 has been the lowest scoring pillar. 16 countries in the index have pension fund assets per capita of less than $250. And for 17 countries, the overall score on this pillar is lower than last year. Part of the explanation, no doubt, lies in a decline in pension fund assets themselves, which fell marginally for most, but fell in 11 countries in the index in 2020 versus the year before. Part of that is pandemic related, right? There were contribution holidays in some, there was some temporary easing of rules around withdrawals for others. In all cases, there's been a general employment disruption that, of course, impacts flows into pension funds, and that's sort of a global phenomenon. But a bigger driver of the decline, as you can see from the graphic in front of you, speaks a little bit to the construction of our indicator itself. So we look not just at assets under management of the pension fund industry per capita, but also we reward countries where pension assets as a proportion of the market tend to be higher, and then we make an adjustment on that for sort of market liquidity and turnover. And of course, it's that liquidity and turnover that's really been impacted over this pandemic period. That said, pleased to show that Namibia, taken first place in the pillar for the second year running, aided, I suppose, by the push from government not too long ago to insist that local pension funds have at least 45% of their assets invested domestically. And certainly, if we look at the figures from the country, they're very near that level now. And you can see, if you just look at the left of the graphic, actually broadly, Southern Africa countries, whether it be South Africa and Botswana or Eswatini, tend to perform pretty well on the indicator overall. Positive stories, well, there's several, happily, even though the overall index is under some pressure. For example, Uganda's pension funds assets may be very small, but the rules have changed to help what has historically been an industry very focused on government securities to branch out, albeit a little bit, but making it able for Ugandan pension funds to invest in real estate investment trusts. Another example of a step in the right direction, I suppose, is the observation that we see in many countries where participants highlight that while trustees are sort of trusted and of high quality, just the knowledge base, the ability to move beyond sort of very traditional asset allocation decisions is very much hamstrung. And so entities like in Kenya, the Capital Markets Authority is undertaking capacity building initiatives for different groups, including pension and insurance schemes, to help get that product knowledge out and make the pension industry more dynamic. We flip to the fifth pillar. The fifth pillar is sort of looks at what we call, broadly speaking, sort of macro performance. And so there's traditional macro stuff there, like economic growth. There's elements of this that are around the export competitiveness of countries. We look at banking sector health as well. But other parts of it around sort of the transparency of these markets. So we evaluate the quality of governance based on sort of external debt management. We think about financial sector transparency around just how easy it is to understand when monetary policy decisions are going to be made, that budgets get delivered on time, etc. In this space, you'll see that Egypt heads the pillar this year, a strong track record of market reforms. But broadly speaking, countries score fairly highly here. Where we have seen deteriorations, so for example, we see deteriorations here in Malawi and in Lesotho, it's tended to be a mix of sort of the economic growth component, but also around macro data standards. We sort of reward countries for making lots of data available at high frequency. And what we've witnessed over the last while, particularly in some of the smaller countries, is a push to take macro data releases for major indicators and move it from quarterly or monthly into annual. And that makes for a more difficult investment environment. But let's turn in the time we have to the last pillar, and then I'll offer some closing thoughts. So if we think about pillar 6, Pillar 6 is really about strong legal frameworks. It's rules on financial asset property rights. It's on the recognition of internationally accepted legal standards. And with the view here really being that greater progress on these fronts should help build a more attractive and actionable investment environment. In this space, you'll see progress made particularly from two of 2021's our index's real standout performers, Uganda, which moves up on this pillar from mid-table to 5th place in just 1 year, and Malawi, which moves from 3rd last to 7th in this year, as both of them sort of adopt best practice around sort of netting and collateral positions. For those countries here on the graph, sort of more towards the right, you'll see that in many cases scores have fallen. And for the most part, this reflects, I think, probably better information from in country where we've looked in a much more practical way in the index this year around to the adoption of some of these global standards in country. And perhaps one of the things we found is maybe we've given countries a little more leeway in previous years and this year's when we think about how the standards are actually adopted in a practical way. But that brings us to the end of our discussions on the pillars themselves. If we pop ahead one more page, I just want to say I'm very happy to report that all of the underlying data that Kat and I have been talking about in the index is available for everyone to see. OMFIFS hosts a brilliant interactive website, and while the page in front of you is static, if you hover over any of the individual countries in the index, you'll get to see more detail for the sub-scores, just what goes into how that country performed this year. You'll also see some data about performances in previous years as well. That data, as I mentioned, is available on the OMFIF website. The report itself is available both on the OMFIF and on the Absa website. And so on behalf of Kat and myself, thank you very much for your time today. We'll both be available for questions a little later on. But for now, let me hand back over to David and to offer up our esteemed panel. Thank you.
Thank you very much, Kat and Jeff. And you've taken us through that in an incredibly granular way. And I'm sure there will be questions on this, both during the hour we've got here and maybe afterwards as well. There was a question already coming in from Botswana on a very technical point, but an important point about the technical reporting of FX positions and so on. So there'll be more like that. And great vote of thanks to both of you and your teams for doing such a tremendous amount of work on this year. It's really been fantastic, and we can see it all here. Now onto the panel. We've got a panel of 5 experts to go through this, partly from the point of view of individual countries, but also from the point of view of the continent as a whole, and what we can learn from this year's findings and how we can build on that for the future. So let me just introduce briefly the 5 who will be speaking to you in the order in which they will be speaking. We have Caroline Eibel, who's the governor of the Central Bank of Seychelles, you are proud to be there in that sustainable list. I saw that, Caroline. Thank you very much for being with us. We'll go over to you in a moment. We have Moses Pereiro, who's the governor of the Central Bank of Botswana. Botswana has always been in the top 6 of our list, and it's been exemplary in many ways. I know you've put a lot of thought into what you're going to be telling us, Governor Pereiro of the Bank of Botswana. Looking forward to having you here in just a few moments. Stefan Nalantambi, who's the director of the Financial Sector Development Department at the African Development Bank. So you're in the engine room trying to forge a way forward for financial markets all throughout the continent. We have Modupi Famakinwa, who's the head of corporate funding at the Africa Finance Corporation, again with a Pan-African hat on to think about what we can learn from this year's index and what we can build on. And then Anthony Curie, who's from Absa, Director of Global Markets at the Absa Regional Operations. Thank you for being with us, Anthony. And you're going to be doing a bit of a sweeping up role, I think, here to tell us a few thoughts about the future. I've compared this index in the past with the Wisden Cricketing Almanac that tells you everything that happened in the cricket season. This year is even better than the Wisden Cricketing Almanac, and it's got better statistics and better interactive databases to back it all up. So please do delve into it, all those people who are on this video call. Caroline, what strikes you from this year's index, not just regarding Seychelles, but also as Africa at large? Could you give us a few of your thoughts, please, Caroline? Thank you very much for being with us.
Thank you, David, and greetings to all fellow panelists and the audience. First of all, I would like to thank Absa and OMFI for this invitation, and also for, despite COVID-19, for us to keep on track with the index, which actually shows us how we fared despite challenging times. So I would like to commend Absa and OMFI for continuation of this. Perhaps from what I've observed and followed the presentation this afternoon, one thing that comes out is despite the COVID-19 event, which has shook all elements of our society and the financial system, it shows that the financial markets, despite the stress, is resilient. We have been able to introduce elements that, for example, technology has been picked up, and perhaps it would be good for Jeff to expand a bit on that, particularly when I think of inclusion, because, you know, with technology moving ahead very fast, how has this affected investors in general, where new technologies have been implemented? And what also is important is that the index is progressive, is taking note of what is happening on the ground. And here, I commend Absa to bring on the ESG parameters, because it will set before us the work that has to be done, because we are talking a lot about it nowadays. So it can showcase what we are doing. And at this point, if I give the example of Seychelles, because we have been shown as other sustainable bonds. In 2018, we launched a sovereign blue bond. Seychelles has been pushing a lot on environment protection. And over the years, we have concentrated on land. And we thought that in view that we have a marine area that is much bigger than the land, that we need to bring some protection to marine resources. So this bond of worth $15 million is actually targeting protection of marine areas. We are setting areas up to now is around 30% of our sea area is protected. And we are providing funding to move towards sustainable fishing. And this year, there's a lot of emphasis in talking to the fishing community in how we move forward with sustainable fisheries. And this is very welcome. And given that this is now part of the index, I think it speaks volume that as an African continent, we are going to push ahead. And as regulators, we are going to encourage our financial system to really consider sustainable elements as part of the journey. So at this point, I will end here and allow other colleagues to contribute. Thank you.
Thank you very much, Caroline, for emphasizing the blue bond aspect. As you said, that took place in 2018, so you played a genuinely pioneering role there. And I'm sure this is going to catch on. It is already with a lot of island states who, of course, are all politically, particularly vulnerable here. So thank you for your contribution. I'm now going to go on to Governor Pereiro from Botswana. Perhaps you could tell us what strikes you as being really most important in this year's index, and what does this tell you about the way that Africa and financial markets are developing? Over to you, Governor.
Thank you very much, and good afternoon to you all and fellow panelists. Good afternoon, and thank you, Governor, for a brilliant start of the issues. I know that our time is limited, so I'm going to try and be very brief around the broader topics in which I want to focus on. I think, let me first start on the broader issue of financial sector broadening and deepening, and the contribution that this index does make to this effort. I think we all know that there's a general consensus around the existence of a positive correlation between financial sector development, economic growth, and more broadly, the economic development challenges that we are facing in the African continent around underinvestments, for example, in infrastructure, levels of poverty, and in the context of Botswana, inclusiveness, or let's just say inequality problems, youth unemployment, and so forth. So I think the COVID-19 pandemic has not only provided us an opportunity to reassess our ability to deal with crisis, both individually and collectively, but the most significant point that I would like to bring, David, to this conversation is that, we're going to need to mobilize huge amounts of resources to tackle these development challenges, including the rebuilding of our productive capacity, the resilience of the economies, and also the transformation of the economies to boost productivity, and as I said, also infrastructure financing and global competitiveness. And this requires productivity of both short-term and long-term finance for sustainable and inclusive growth. Now, the irony of it is that in most financial systems in most African countries, including here in Botswana, remain very small, fragmented, and not well diversified, providing a very limited number of services at a relatively high cost. And therefore, this Absa Africa Financial Market Index is an important component of the development of our financial markets and economies at large. That will help ultimately address some of the bottlenecks and make the continent visible among the universe of financial markets. Therefore, let me congratulate Absa and OMFIF, I think, for contributing immensely to reduce this information asymmetry and reduce the so-called Africa risk premium. I think the other point that I really wanted to deal with is the question of size, scale, and diversity of products, as well as the paucity of supply of critical mass of equities and bonds and other instruments in the markets, including knowledges and skills. Now here, I think this is where regional integration, and in the context of the sub-Saharan Africa, will be very important for financial market infrastructure development. As we know, disaggregated markets and regulations can inhibit the movement of capital and market development in general. And therefore, countries in the region can really work together to try and deal with these small national market problems towards developing, for example, common governance architecture, including adoption of international standards, laws, and rules that govern financial institutions and capital movement. Now, these overarching laws and regulations are very, very important for regional integration, for member countries in the sub-Saharan Africa to standardize on some of the products. And I think that will be also important for pricing and investment. I think there was also the issue about digitalization. I think, moderator, it will be remiss of me not to emphasize that the African governors of the IMF and the World Bank Group are also seized with this opportunity in terms of what can we do to adapt to take the opportunity provided by digitalization to promote more efficient and inclusive financial systems. And in this regard, of course, the fintechs, the crypto assets, and similar technologies are very, very important. So talking about financial sector development and deepening of markets in Africa, I think the question has to be, digitalization technology are going to be the future, and we need to see how best to utilize that for the purpose of increasing the efficiency of the markets. The other point that I wanted to throw in, I know that time is not on my side, is the market or public infrastructure. Now, most countries in the region still have bonds clearing in the domestic systems only, thus limiting the investor base largely to the domestic capital markets. Obviously, this created some serious problems. So making bonds available in international platforms such as Euroclear, we can tap into the global pool of funds by offering trusted and convenient settlement platforms. I think this whole question of a well-developed public infrastructure comprising a system of business laws, corporate bankruptcy rules, investor protection, and private property laws, obviously consistently enforced, as well as the accounting and the auditing, the quality of the accounting and auditing, very important in terms of developing the markets. Finally, as a central bank, let me obviously emphasize the role of macroeconomic stability. Clearly sound and sustainable macroeconomic policies and well-established frameworks for financial stability policy, as well as sound governance, are going to be very important. The issue of price stability is very fundamental to the long-term success of a financial sector. As you all know, price volatility can be just as disruptive to effective financial intermediation as in the economy more widely. And therefore, this whole question of inflation or volatile inflation can be very disruptive to capital markets development. And I'm pleased that obviously this is something that is also central bankers are paying a lot of attention to. And I saw that in the context of Botswana and other countries, the pillar around these particular factors or yes, macroeconomic stability and so forth, we are quite relatively very strong. And therefore, I think this is a very important one. And finally, I think I cannot more than emphasize issues of the integrity questions. This is governance and ethics. There is this whole issue about how people perceive Africa and what we'll do. Moderator, I will be, hopefully can come back to say a few words about some of the things that we have been doing in Botswana, and also just comment on the exchange rate issue for us, the reporting issue. We're a little bit surprised to see how it came about in terms of reporting, but this is something that I think we can engage with those who were doing with the construction of the index so that we can understand where the problems are. Let me pause here and give others a chance to comment. I thank you very much.
Thank you, Governor. That was extraordinarily thoughtful. And those 4 or 5 really big points that you made, there'll be food for thought for our other panelists here. But I also think that you provided us with a wonderful examination paper, really, for how we should go forward in a lot of different ways. And we'll certainly come back to Jeff on the question of technology, which Caroline Abel made, but you also made regarding digital. So Jeff, get ready for that. There's a question also about the FX reporting that I mentioned before, a rather granular, but very important point. So let me thank you very much indeed, Governor, for those comments. And we'll be posting all that on our website. So I think what you said will go out to a still wider audience. Well, this is a perfect segue for you, Stefan, since you're talking about the effectiveness of markets and some of the points the Governor just made now about, say, standardization, Euroclear, public infrastructure, market pricing and so on, very, very relevant to what you have to say. So over to you, Stefan, to give us your view from the viewpoint of the African Development Bank.
Thank you, David. And first of all, allow me to thank Absa and ONFIF for trying to share my thoughts of the FDB. First of all, I'd like to say it's not surprising that the general trends this year are downwards, given the effects of the pandemic. But it is important to remember that Africa is coming out of this in a stronger position that we had predicted. In fact, last year, I was looking through my notes and we had, I was at a conference in April 2020 and the FDB were predicting contraction of up to 5% of the economies on the continent. And in fact, in the 2021 outlook that we published recently, the continent's GDP contracted by 2.1%, which is the lower end of the predictions of last year. So we're not as bad as we had anticipated, which is good news in a way. Now, although individual countries have needed some debt restructuring, we know that Africa has not had to weather the full-scale financial crisis that many had feared at the start of the pandemic. So without minimizing the devastating effects of the pandemic, let us recognize that significant improvements in the African financial systems that also transpire through this index in terms of inclusion, regulation, and stability in recent years. We at the African Development Bank believe that the COVID-19 pandemic does not change the long-term financial sector agenda for the continent, which must remain focused on expanding access to financial service for the underserved, both households and businesses, and that of course does go through digitization, and broadening and deepening of financial systems. So building the resilience of Africa's financial system to withstand future shocks, including through development of long-term local currency finance markets, is key. We're pleased to see that the message is driven home by this year's index as well, and that deepening local financial markets is now universally seen as an optimal means of hedging against international economic fluctuations. We know that many economies have relied mainly on local currency financing for both sovereign and private sector transactions, and that was the case of the development for Japan, the US, and the UK, because they fared better in economic development and are more resilient when there are global shocks. So at the FDB, we've been working with Making Finance Work for Africa and the IFC to understand how COVID has impacted African institutional investors and their investment strategies and portfolios. The research also attempts to understand their attitudes to alternative investments, including infrastructure bonds, green bonds, private equity, even venture capital. My next few points will therefore draw on that research, which we hope to publish in early 2022. First of all, according to the FDB's Economic Outlook of 2021, portfolio flows in Africa completely reversed from a net inflow of 23 billion in 2019 to a net outflow of 27 billion in 2020, driven by the COVID-19 shock, of course, to global growth and a more risk-averse sentiment among offshore investors. However, we did also realize that in countries like Ghana, where trading volumes on the stock exchange, the local stock exchange, were significantly higher in 2020 than in 2019. And this was due to the domestic institutional investors taking advantage of attractive yields and prices. The pandemic therefore reinforces the importance of the role in domestic institutional investors in providing a stable investor base to support capital market developments. Their increased interest in equity markets helped provide some stability in the initial phases of the pandemic. Another impact of the pandemic, and this has been mentioned by all of you here already, has been increased awareness of new and emerging risks such as climate change and, of course, health. And this is, allows us to have a lot of opportunities in these areas, in green finance, sustainable bonds, pharmaceutical sectors, and of course in digitization of these sectors. Domestic institutional investors are taking a broader view of risk, but also of opportunities. This is also an opportunity for us, therefore, to deepen capacity of local markets and think about how we can use them to address issues that are emerging and link them all to the implementation of the Africa Continental Free Trade Agreement that has been also mentioned by my predecessors. In this context, we're pleased to see the index confirm that African countries are embracing sustainable finance, incorporating international investment norms, and in some cases adopting pioneering methods. Africa's improved financial market resilience makes the continent better equipped to forge a brighter future. The last 18 months have been difficult. The scars of 2020-2021 show clearly the sharp fall in average scores. However, Africa has built a platform for resilience, displayed a constructive detail in these years' findings, and countries' ability to adapt to a world in transition. So the way the FDB, and I'll be brief just to show a bit what we're working on in developing domestic markets. We really believe it's important for us to work on these long-term currency finance options locally. Firstly, our first area of work, of concentration, is on addressing weaknesses in financial market structure, policy, and regulatory frameworks. I'll give the example of where we've been working with Ethiopia. It was mentioned earlier on. We worked with the National Bank of Ethiopia to implement reforms towards the development of nascent capital markets with emphasis on improving market infrastructure and strengthening the legal and regulatory frameworks of capital markets through training, capacity building, and upgrading of financial market laws. These laws have been passed last summer, and so they're paving the way for the establishment of capital markets, a functioning one. Elsewhere, we've supported the integration of financial markets through providing investors access to a broader range of investment options and issuers, to deeper pools of capital through projects such as the Africa Exchange Linkages Project, which covers 7 of the biggest stock markets in the continent, and the West African Capital Markets Integration Project. In the second instance, we're working on broadening and deepening of the pool of investors, and this was mentioned as one of the pillars where it's been always the weakest index numbers. We've been working on deepening of the pool of investors, market participants, and capital markets products to promote liquidity and depth within the markets. Coming back to Ghana again, there we've worked through our Capital Markets Development Trust Fund that we've set up that is actually focusing on West Africa for the moment. We've supported the drafting of market rules for investment products such as asset-backed securities, pooled funds, to catalyze diversified market products and savings mobilization on the Ghanaian capital markets. Finally, and this is important, that we're looking to build a pool of knowledge work and capacity building programs to inform current and future operations. So we believe that knowledge creation and sharing is critical to developing a resilient financial sector capable of supporting Africa's real sector. Our knowledge initiatives include the recent launch of the African Long-Term Finance Initiative website, which is in partnership with Making Finance Work for Africa, GIZ, and FSD Africa. The website not only serves as a platform for information exchange relating to long-term finance issues in the different countries of the continent, but also assembles information about good practices and success stories in long-term finance space. The aim is to improve market intelligence alongside this Absa index on long-term finance in Africa and establish an interactive platform to enable cross-fertilization of country experiences in this area. These are just a few of my preliminary thoughts and sharing with you about what we're working on. Look forward to the questions. Thank you.
Thank you, Stefan. And again, you've just given us a glimpse, haven't you, of all the things you're doing. And we look forward to sharing some of those points as you bring out these reports and as you intensify those studies. We look forward to sharing those with other participants. And I like the way you mentioned success stories. It really does come down to highlighting positive examples and case studies. People like to get their teeth into something really quite practical. As Jason said right at the beginning, this is a portal for getting things done. We must never forget that. So Modupe, it is your turn now from the viewpoint of the Africa Finance Corporation. We've had a lot of very granular input already, a lot of very intelligent suggestions that we will be building on as well. Perhaps you could just give us your point of view about what the index is really telling us this year. Modupe, the floor is yours.
Thank you. Thank you very much, David. And thank you to all our panelists. It's been such an engaging conversation thus far. And I just want to commend Absa and UMFI for the work they're doing, particularly for, recognizing the importance of sustainable finance and recognizing it in the metrics to be measured. Sustainable financing is not an end in itself, but it's a means to an end. And, the realization of sustainable development goals across the globe have at its core, data, comprehensive and consistent data. African governments and corporates so far have been, some of the drivers of, sustainable finance issuance on the continent. But that notwithstanding, out of Africa, you just have about 1% of annual global issuances coming out of the African markets. We've seen thus far, some countries leading the way, the likes of, Egypt, Kenya, and some of the East African countries. AFC itself also issued our first green bond last year. We continue to drive thought leadership in that space, constantly engaging with, local governments, financial markets, regulators, and trying to incorporate this into the way we do business. Now, one of the things that we've come to realize is there's a significant amount of green financing, sustainable financing looking at the continent, but the continent, has yet to take full advantage of this. And one of the things we continue to encourage is that corporates need to look at the way they do business themselves. We need to begin to develop sustainably. We need to begin to look at how we source our natural resources. We need to begin to look at how we develop our markets. And I'm glad that, this is coming to the forefront. We're seeing the likes of the COVID pandemic revealing how significant it is that sustainable finance be accelerated on the continent. The COVID pandemic showed us, the exacerbation of vulnerabilities and the urgency of a renewed focus of the SDGs on the continent. A lot of the DFIs, such as the AFC, for instance, have, tried to drive that. Our colleagues, such as the AFDB, issued a sustainability-linked bond and social bond during the pandemic. We need to, it's also highlighted that, there have been weak financing projections, and the role of the development banks in this market is pivotal. One of the things we'll continue to do as AFC is, continue to drive this from the point of investment in infrastructure assets on the country. We use the IFC performance standards in every project that we perform, and we actively promote sustainable development on every project that we invest in. AFC has been involved in infrastructure development on the continent for about 13 or 14 years. And for every project we bring to the market, we ensure that, the focus is not just on profitability, but on sustainable growth. To that extent, we ensure that each of our projects have the necessary ESG standards in place. We ensure that, there are grievance mechanism in place to report any incidents, etc. And then we encourage, the rest of the continent to come along. We're talking to financial regulators constantly to ensure that, we have the enabling environment for investors to invest on the continent and to bring their investments in here without a sense of, with comfort and confidence in the system that they can get their investments back. I'll pause here, given the few minutes that I have, and I'll carry on in question and answers. I'm mindful that we're running quite far behind time now. Thank you.
Yes, thank you. We will beat the time constraint, I'm sure. Thank you for mentioning this point about the international investors. I think it's very important that there should be missions of pension funds going to Africa and actually seeing what's happening on the ground, and also measuring some of this progress in standards. So the work you're doing, Modupe, I think is going to be really valuable for that. Now, Anthony, for your thoughts, please, again, on what we have learned and how we take this, what Peter Malawi called a toddler of an index, is now become a 5-year-old. It's now not only walking, it can talk and can think. How do we take it all forward? Anthony, over to you.
Thank you, David, and thank you to my fellow panelists, and in particular our governors here with us today, Caroline Abel from Governor of Seychelles, the Bank of Seychelles, and Moses Pereiro, the Governor of the Central Bank of Botswana. I think, David, one of the things that came through from this year's report, and one of the panelists actually mentioned it when commenting on Ghana, and reflecting on the participation of local investors, is the importance of local investors, particularly as they play a role in supporting our markets with the global uncertainty that we have seen in the midst of COVID. And what's particularly encouraging is some of the efforts that a number of regulators, market participants in partnership with the regulators have done, is to drive issues around the adoption of global master agreements and the required legislation needed to support that. So I think of particular importance is the enforceability of closeout netting within a country's financial markets, helping to address issues around counterparty risk and creating legal certainty around financial transactions. And I think of particular note, particularly in Pillar 6, is how countries like Ghana and Uganda have done particularly well here. We know that in Ghana has been working with the likes of Frontclear to review its legislation and regulatory framework, identify those gaps, and see how those gaps can be addressed to further help the deepening of their financial markets and adoption and enforceability of documentation such as ISDAs, GMRs, and even the GMSLA within this market. Uganda as well, through the National Payment Systems Act, which it passed towards the end of 2020, and again through netting, a specific netting provision that they placed in there that makes these various contracts enforceable and binding on third parties, even without prior notice of the court, of an order of the court. So I think these are particularly interesting developments. And added to this, we've seen Kenya has started or is about to start UAT testing on their upgraded Central Securities Depository, which will actually support horizontal repos and repo transactions, which is key to supporting and developing the OTC markets. And I think when we talk about even inclusivity and leveraging technology to attract and bring in retail investors and broaden access to the financial markets, it's important that the rails themselves, the wholesale market itself, is efficient, has two-way pricing, you're able to repo securities, and therefore support the deepening of the market. So I think I'll be particularly interested in coming years how our toddler, our 5-year-old becomes a teenager, to use your expression borrowed from Peter, becomes able to then support other pillars like market deepening and Pillar 1 and some of the other pillars around investor capabilities under Pillar 4. And I think these will be exciting times for us to look forward to. So thank you, David.
Thank you, Anthony, also for providing a perspective of the future. And one might say that financial markets are not everything, but without financial markets, everything is nothing, because there's a lot of interconnectivity, as you pointed out, between these different rails. In a moment, I'm going to go back to the 5 panelists, but I'd just like to put our 2 authors of the report a little bit through their pieces first, because there's been a number of questions that have come up from the audience, but also from Governor Abel and also Governor Pereiro regarding the some of the components of the report. First of all, Jeff, Caroline Abel brought up this point about technology, and I think she meant not just digital technology, but technology in general in the way it's driving innovation and development on financial markets. Can you think of ways, Jeff, that we can do more in the index to build some recognition of technology into the different points that we give to different countries in different spheres? So let's have a bit of brain power from you, Jeff, to tell us about the innovative capability of technology for African financial markets.
Listen, it's a great question, and it's really interesting. If you think about how we've integrated into the African Financial Markets Index this year the ESG components. I mean, we introduced those as an idea last year. They weren't formally part of the index. This year, in 2021, we've been able to flesh it out. So the sharp-eyed here will have seen in the 2021 report, we devote 2 pages to sort of digital fintech, sort of innovation on that side. Not formally part of the index yet, but how it's framed, thinking about countries that are doing more to use digital and fintech to automate processes, countries that are adopting sort of regulatory sandboxes to be able to test out new ideas and see how fintech and regulation can come together to solve real-world problems, a discussion around central bank digital currencies. All of those things are in the text of this year's report. And from where I sit, at least, they look sort of just about suitable to be including formally into our measures from next year. So hopefully we're already setting the scene for that.
Good. Well, that's a really good food for thought. The point about Botswana and the FX reporting, Kat, I don't know whether you can say a few words about that. We've also had a very good question from one of the listeners regarding the local investor liquidity being factored in under our capacity pillar. And the listener says, is this new? I know we did mention it in your presentation, but could you maybe just flesh out a little bit more about the importance of the liquidity issue in this capacity pillar? It particularly applies, I know, to the equity market. So for 2 slightly difficult questions for you, Kat, over to you.
That's fine. That's what I'm here for. Thanks, David. So I think just to address the question on FX reporting, right? So first of all, I didn't get a chance earlier, but I'd like to take this opportunity now. I would like to thank Botswana and Seychelles, the central banks especially, but also the other regulators in those countries, as well as all the other policymakers in the different countries whom we engage with in order to conduct the survey for this report. So the survey forms a very important component of the research because we really get insight into what's going on in the countries. Having said that, there are also other components to the research, right? So we use various data sets, data sources in order to score countries based on the indicators we set out. We look at 43 indicators for the entire index. So that particular indicator on FX reporting, we needed a data source that could help us standardize, like a standard data source across different jurisdictions. And for that particular one, we use the IMF Article 4 consultation reports. There was a bit of a change from the last available report to the most recent one, which I think came out in June of this year. So having said that, we should probably look into why what is going on and why there was a change in that reporting information. And I'm very happy to carry on that conversation after the launch. The index, as Jeff said earlier, is constantly evolving, and we're looking for better ways to measure the different indicators that we have. And that's certainly something that we want to look into through further engagement with the policymakers who are helping inform the scoring for the index. On the question about liquidity and how it impacts Pillar 4. So Pillar 4, as Jeff explained earlier, looks at local pension assets and how it's impacting, or rather its potential to impact the domestic market. And so we get a ratio of pension assets up against listed securities, the amount of listed securities, and we weight that using a liquidity score that is based on turnover ratios. Now we do that in order to understand, or in order to compare really how the size of retirement assets available in a jurisdiction could be impacting the local activity in the local markets. So that's why liquidity is an important component of that pillar.
Well, thank you. There's been a number of questions coming in. We won't have time actually to go through them all for you and Jeff, Kat, but we can do that, I think, afterwards in a more offline version for some of the listeners who are asking quite detailed questions. I just want to go now back into the panel and ask people in the order in which they spoke some questions which have come up from the audience, but also ones that I'd like to put to you. Starting off with you, Caroline, you mentioned the blue bond. and the pioneering nature. You mentioned also the detailed work you're doing, also say with the fishing community. Where can we use that experience that you have had now, on the ground experience or on the sea experience over the last 2 or 3 years? How can we put that to the use of the international community when we have people like the World Bank, or we have other regional developments? They want to know how these blue bonds work. What can you tell them in terms of practical learnings that you have had that you can put to use for the rest of the world?
Thank you, David. I think since we did that in 2018, Seychelles have been approaching in a number of ways from island nations and others. So Seychelles is very open to share its experience, but I think in light of the general discussion about sustainable fishery around the world, and especially for us, given that we have industrial fishery and how this fishery is being done, it was important to showcase that we are committed to protection of our marine resources for the future generation. So with that objective in mind, then the concept of the blue bond came into force. So I think this idea can be put into place in various components of environmental protection. And as I say, we are ready to showcase that with other authorities.
That can be used, I also think, in some of these reports. Stefan, you were talking about showcasing the success stories, but also obviously doing some work with the World Bank on these pioneering instruments. So looking forward to working those things in. Governor Pereiro, you said such a lot of interesting things that we could actually use a whole hour, I think, to go into some of the questions. Unfortunately, we only have 10 minutes left before I have to hand over to Charles. So could you just give us a few more extra pieces of insight into what you were saying right at the very end about the work that you've been doing and the practical steps you've been making in Botswana on the question of governance and ethics and standards? Please, let us have your further thoughts. Sorry, you're on the mute here, so please switch on your microphone.
Thank you.
Thank you.
Am I okay now?
You're fine. Hear you loud and clear.
No, thank you very much. Yes. Well, let me first of all again appreciate some of the comments that have come in, and indeed make the point that we have been looking at a number of international standards, regulation and supervision of markets, and amending our securities regulations, and trying to address some of the gaps that we can deal with. But I wanted to just to emphasize a few points that I really want to come back before I conclude on this remark. The first thing is this question of domestic investor base. And the question, and there was also this conversation about net capital outflow out of Africa. And talking about a financial market index like the one that we are doing now to improve the visibility and transparency, but also benchmarking on policy side is a very important thing, because if you take a country like Botswana, for example, about 60% of pension funds and other institutional investors, endowments and so forth are invested offshore. And you have a gap in terms of government now in the recent years experiencing fiscal deficits. And there are all kinds of other development challenges in the horizon. And government is looking at ways in which they can optimize the financing of the fiscal deficits. So the other issue is to rebuild the buffers. And rebuilding the buffers means not only looking at public institutions or public finances and so forth, but it's also about looking at the private markets, both domestic and international. And this is an area where Botswana realizes that we have not done particularly well. First, as I say, we are a net exporter of capital out of the country in search of better yields. The pension funds are obviously looking after their own retirees. And so I think the question is, how do we reverse this to make sure that these resources can be utilized to address this challenge? Now, the issue around technology and related issue and coming back to the developments that we are doing is really a question that we have realized that we are behind the curve in many ways. So if you look at structured products, innovative financial products, risk management products, both for investments and as well as that, we are virtually non-existent. And so we're behind the curve. Now, when we talk about innovative things like green bonds, blue bonds, and others, obviously very, very important developments, but nevertheless, we still things to learn. So that's why we have looked at legislation, look at international standards, and more importantly, to look at our fund management, let's say businesses and architecture, and putting out a number of governance codes and standards to try and raise the level of, ethics and looking after investor and these fiduciary responsibilities to make sure that they are fully aligned with the development of the markets. Clearly, accidents do happen, and we have had examples of problems where people did not act appropriately, which undermine the local market here. So let me, I think, stop here in terms of that. But it's a big area that we think that this integrity question, governance issues, but also corruption issues need to be addressed in order to make sure that we are not just looking at a number in the index, but also qualitative aspects as well. Thank you.
Well, thank you. Yes, you've just really addressed the tip of the iceberg. There's so many things to unpack from what you've just said. I would put forward the idea that we have a separate session on some of the issues that you've just raised, Governor, in coming weeks and months. We can maybe do that with our friends at Absa as a special edition, if you like, before we get to the next year's report. We've only got now about 4 or 5 minutes before I'm going to hand over to Charles, but I've got 3 questions to put to the remaining 3 panelists. So you're going to have to be very quick, please, lady and 2 gentlemen. The first point, Stefan, very good point from the audience that has come in, which is to say, how can we look at the point of view of the credit ratings of African countries, both the sovereigns and the corporates? How can we get those up a bit in order to help the general development of African financial markets? So please, your answer in less than a minute.
That's a very good question. I'll say, first of all, of course, there's the role of the AFDB and other MDBs that support through risk mitigation. We have these risk management products that can support certain countries or corporates to issue with our support. But beyond that, I'd actually just like to throw a spanner in the works and say, I've always said, why don't we throw out there at COP26 the value? Why don't we start valuing the assets that we have from a green perspective as a continent? All that we're supporting the whole earth through our forests for breathing, and these assets are not valued. The liabilities, they're always willing to value the liabilities. All over the world, we're valuing liabilities, but we're not valuing our assets. So that would be part of my response, in the fact that I think we should also be able to make a clear voice to see and work with the rating agencies and, of course, the auditors and the accounting firms on how we also, beyond talking about stranded assets and liabilities we're all going to be living through, the fact that we have these huge assets that we are providing for the whole world, how can they be valued?
Okay, let's put that onto our roadmap for the future, Stefan. Thank you very much for saying that. And let's talk to the IFRS and others and see what the bean counters think about all that. But Dube, another very good question from the audience, which goes back to some of the things that Vera Songwe, who wrote an extraordinarily good editorial for us, has mentioned also in the past. How do we build the greater number of African financial market instruments so that more of the reserves of the African countries are invested on the continent, in the continent, rather than outside? Do you have any remarks about that? Again, I'm very sorry, the answer has to be in less than a minute, please, Modupe.
So I'll just say quickly, we have a significant amount of resources, particularly with the pension funds. Some of the things I know the conversations we've had with pension funds are around how they can put that fund to use for infrastructure. So some of the things we can begin to explore are perhaps infrastructure bonds. For instance, we can, leverage and take advantage of funding local projects in local currency. That will certainly drive down the cost for everyone. But what we need to bear in mind is the regulators need to make it work. The regulators need to make this, some of these instruments accessible, qualifiable as liquidity, for instance, for some of the institutions. Those are the challenges they have. Let me stop here because certainly I can't unpack it enough.
No, but this is a very good answer, I think, and helps us to take this forward. As I say, Vera, I know, has done a lot of work on this, building a kind of BIS system within the African continent. I really do think we need to work on that over the next 12 months. I'm going to hand over to Charles Russon in a moment, but first of all, Anthony, it's your dream question, really. What do you want to put into the index next year to make it even better? What thoughts do you have? Again, answer in less than a minute, please.
Wow, that's a heavy question, David. So I think really what we'd like to see is what are the things that, and much like Pillar 6, that regulators, markets, intermediaries, and getting the voice, especially of the market intermediaries, of what they would like to see themselves and what they think their regulators need to focus on more strongly in terms of being able to build their local markets. And I think I've made reference to that in my comments earlier. And I think that's what is really exciting, is the potential, and much in the way the title phrase of our report this year, potential lives here. And really, how do we then capture that within our index to speak more about the potential and focus us for successive years? So that's what I'd like to see more and more.
Good. Well, that will be a leitmotif for the future. Just 2 points from me. One is that this is a living index. So when the world changes outside, we change too. And we've done that this year. And we're going to take on board a lot of the very positive points that you've made just in the course of this brainstorming session. We're going to build that in. My second point is simply a vote of thanks again to the tremendous teamwork that we've had with Absa. Kat and Jeff, you have been the two stars of the show here. There's quite a few questions also from the audience for you, which we've not had time to look at. There are some on bond issuance, on the importance of subjectivity in the way we do our index, and also some other very detailed questions, which we will answer. Those of you who are listening, I'm sorry I haven't been able to get through all the questions, but the spirit of this index is very lively, it's very forward-looking, it's very resilient. And with those words, I'd like to just hand over now to Charles Russon, who's the Chief Executive Corporate and Investment Banking and Acting Group Executive for the Absa Regional Operations. Over to you, Charles, to deliver the pièce de résistance right at the very end. Charles.
Thanks very much, David. Let me start by thanking everyone for having spent time with us today as we reflected on our 5th Absa Financial Markets Index report and the opportunities and the guidance it provides. As you've all noted, this is the first year that the index has included an indicator on the availability of sustainable finance products, such as green bonds and equities, which now contribute to each country's scores for market depth. This is an important reflection of the global push towards sustainability. The introduction of the sustainability-focused indicators has had an impact that has weighed down the scores. But we hope that going forward, the new measures will serve as targets for all our countries to work towards. We are, of course, mindful that the recovery from the COVID-19 pandemic has not been as straightforward as we would have hoped, which has had an impact on reinvigorating financial markets post the pandemic. At Absa, we've been encouraged by the positive progress in countries' efforts to upgrade market infrastructure and regulatory support through the development of technology-based tools which will help future-proof Africa's financial markets. With countries using innovation to boost local markets and build a broader investor base, there are plenty of reasons to be hopeful about the future of Africa's macroeconomic landscape. We continue to be very proud and grateful for the caliber of work that our partnership with OMFIF continues to yield. The level of expertise and commitment is only matched by all our passion in ensuring that we continue to have an index that delivers a meaningful basis for planning, that delivers continued growth and development of our African economies. It is through partnerships such as these that we're able to continue to strive to become a leading Pan-African bank. And before I close, a special word of thanks to our panelists for their time and their insights. Moderator David Marsh, Chairman of OMFIF, Caroline Abel, Governor, Central Bank of Seychelles, Moses Pereiro, Governor, Bank of Botswana, Stefan Nalatambi, Director, Financial Sector Development Department, African Development Bank, Madupe Famakinwa, Head of Corporate Funding, Africa Finance Corporation, and last but not least, Anthony Karui, Director, Head of Global Markets, Africa Regional Operations at Absa, and Head of Global Markets, Absa Bank Kenya. Thank you very much.